Hello and welcome to the Structured Finance in Focus, Fitch Ratings podcast that takes an in-depth look at the latest developments across global ABS, CMBS, CLOs and more. I'm Andy Brewer, Senior Director in the European ABS team, and on today's episode I'll be discussing recent declines in used electric vehicle prices in the UK with Tom Deacon, who's also a Director in the European ABS team. So, in the UK we've seen EV prices fall by 25 percentage points since September 2022. We measure this using AutoVista data as a percentage of the initial list price after 36 months. Exposure to residual values and negative price movements is much more acute in UK auto ABS deals due to the borrower's consumer protection rights to voluntarily terminate, which allows them to hand back the car instead of making any further payments once they've paid half the total amount payable under the loan, as well as contract maturity for PCP loans. I guess to start with, Tom, where are we with EV registrations in Europe?
Yeah, thanks, Andy. So looking at pure electric registrations only, because this is where we've seen the most volatility in used car prices, they make up around 16% of total new car sales in the UK in 2023 to date. So Germany and France are at similar levels to this, but Italy and Spain lag a little way behind at closer to 5%. Looking at the global picture, Europe has seen faster adoption of EVs than the US, but it's still quite a way behind China. I think it's fair to say that in Europe so far, EV sales are still driven mostly by high-income early adopters and companies, and we're still to see, I'd say, truly mass-market mainstream adoption, but this should come as battery costs come down.
So are we seeing much by the way of electric vehicles in securitized pools?
Well, focusing on the UK, not really. We're seeing fewer battery electric vehicles in transactions than we've seen in new car sales. This is partially because the share of used vehicles has increased in recent years, and EVs still make up a very small portion of the used car market in the UK. Some issuers are also just making a conscious choice to limit the amount of electric vehicles in their transactions. So to put a number on it, and just to give an example, a recent VW transaction in the UK had an initial EV share of just under 8%.
So what are we seeing with recent price declines and the reason for this?
Yeah, so as you mentioned earlier, we've seen a pretty massive fall in used EV prices in the UK, far beyond what we've seen in the wider market. Prices for used EVs as a percentage of their initial list price after 36 months in the UK have fallen by more than 25 percentage points since September 2022. Tesla's aggressive price cutting on their new vehicles since the start of the year is probably the most notable catalyst, as technology has advanced. Improved new EV offerings that make older models less attractive can weigh more on used prices compared with the more mature petrol and diesel markets. Government policy-driven incentives to corporate buyers to purchase new EVs are also not available to private used EV buyers. I think there's just fundamentally a mismatch between demand for new EVs versus used ones.
And I guess also, like for like, EVs are just more expensive. So with cost of living pressures, buyers are more likely to take the petrol or diesel option to maintain the size or style and not pay extra for an EV. It is true that the overall cost or the average cost of an EV is coming down, but this is more to do with the increasing number of models on offer.
Yeah, and the UK government's recent decision to push back the ban on sales of internal combustion engine vehicles from 2030 to 2035, that's probably worth a mention here as well. Although it might be in line with the rest of the EU, it does send out a bit of a mixed message.
So why does this then affect UK deals more than most?
Well, the main reason is that exposure to used car prices is the biggest risk factor in UK auto ABS, and the potential market value losses arising from residual value and VT risk make up the majority of the total losses that we assume in our rating analysis. So VT risk, that arises when the borrower exercises their right under UK consumer credit legislation to return their vehicle instead of making any further payments. They can do this once they've paid more than half of the total amount payable over the life of their financing agreement. So in recent times, high overall prices of used vehicles have pushed VT numbers down to essentially zero, but recent more granular data that we've seen in discussions with originators suggests that the fall in used EV prices has already had a tangible impact on affected borrowers' equity positions, and we view this to be the most significant predictor of whether they'll exercise their VT right.
VT is particularly prevalent in the UK PCP contracts, where the borrower has the right to return the vehicle at loan maturity. And I guess the difference here, as you mentioned, is the borrower's equity position, because in general terms, the average car owner with a fully amortizing HP loan doesn't really worry about it. But if you have to finance the balloon part, trade it in, or give it back, then you really have to decide. We saw this previously. The peak of car sales in the UK was in 2016, when we saw nearly 3 million vehicles registered. And typically, most PCP agreements back at this time were 3-year. So with all these vehicles coming back to the market in 2019, we saw prices falling as supply outstripped demand. And looking at the transaction performance data from this period, you'll see big increases in VT handbacks, as much as 10% in some cases.
Yeah, and I suppose the further the prices fall, the more that the dual impacts of more RV and VT handbacks plus the bigger losses on each returned car, the more those two effects compound. And I think it's also worth highlighting that our VT analysis does account for these dynamics, because we model the depreciation of the car over time versus the amortization of the loan to determine the borrower equity position over time in different rating stress scenarios. And then this is what feeds into whether we assume a VT will occur on a given loan.
Well, thanks, Tom. So to finish up, Tom, do we have any information on default performance for EVs?
To be honest, not really from a European perspective, because the EV shares in transactions are currently quite low. But we do rate transactions in the US with Tesla and in China with BYD and others, and they're 100% EV. So the numbers reported here would lead us to think that they don't really perform too differently from standard auto deals. Our colleagues in China did publish a report on green auto ABS, which covers this in more detail than we can in Europe at the moment, really.
Thanks, Tom, and thanks for listening. All the charts and data are available in our European Auto ABS Quarterly Index, and obviously happy to discuss anything further.